It's Sunday, the 22nd of January 2017. This is a chart update for Northern Star Resources. Northern Star's performed relatively well the first few weeks of the year. Had a bit of a bounce after being pretty heavily sold off toward the end of last year. It actually almost halved in share price between July and December. And I don't really think that's justified. Hence, I think why I was buying around here. I think in the last video I did, which was on November the 18th, I talked about this 330 zone being my buy target, and if it got there, I'd be buying. And actually, it went a bit lower than that as the sort of gold market wasn't too strong in the last couple of weeks of the year. And I bought again, and I think this is in particular one of the reasons why I've been buying the stock, is the fundamentals have been getting stronger. 350 million in the bank, and as we saw in there's an update about Jundee in November as well, and that showed that Jundee was hitting some record operating numbers after they'd done some work there. So I think you could easily see Northern Star produce about 130,000 ounces this quarter in the December quarter when they release their results in the next week and a half. And the September quarter was a bit weak because they were doing that work at Jundee in particular, and I think it was only about 106,000. So you could see Northern Star with 400 million in the bank, I reckon, by the end of December. So this is a company with a lot of strength, and I think they're just sitting there waiting for any weakness in the market, and they can be an acquirer of other companies, and or they can just keep their current strategy where they're just drilling out their good tenements around their current operating mines, and they're finding more and more gold at much better costs and at much better costs than acquiring others in the market. But people might start to get a bit anxious with all that money in the bank, that they should start spending it. So that maybe that's a criticism. It's not from me. I think it's good to have that optionality. And if worst comes to worst, they can start paying it out as a higher dividend, which they probably will at some point. Share prices had a bit of a sort of a stagnation in the last couple of weeks, but it's held relatively well around this 380, sort of $3.80 to $4 region, which is a good sign. Not a lot of volume. A lot of that's probably to do with sort of weakness in January. Generally, there's not a lot of people are on holidays still, but I think that quarterly will be a real driver for the share price. I think if it shows that their costs are going to be consistently lower, I think given the what I think will be 130,000 ounces, you could easily see their all-in cost below $1,000 an ounce Australian. So they would in the December quarter they may have made $600 to $650 margins on 130,000 ounces. So you're getting toward $100 million in free cash flow on those numbers. So yeah, this is a real cash cow, like a lot of the other gold companies. So it's another one. It's still my preference, along with St Barbara, and Evolution Mining's another one. I think haven't seen their quarterly yet either, but I think they're a consistent producer as well, and have got their risks spread across some good assets. So yeah, if I was sort of a low risk investor but wanted to go in the gold space, Northern Star, St Barbara, Evolution, I don't think you can go too far wrong with any of those. But yeah, Northern Star's been consistently a recommendation of mine for a couple of years now, so continue to hold it.